our Tuesday afternoon LARealestateInvestors.com podcast. We get together every Tuesday afternoon, 3 p.m. live on the East Coast Pacific time, 6 p.m. East Coast time, everything in between. We record it. It's live streamed onto YouTube and Facebook. And we talk about all things real estate. This is the official podcast of the Los Angeles County Real Estate Investors Association, which has our live event monthly coming up this Thursday in the Culver City area. And we'll talk about that in just a little bit. Really excited today to have an amazing woman as our guest. She does so much. We could have talked about a lot of things. I'm sure we will cover a lot of things, but she's involved in the politics of real estate. She's involved in the professional associations of real estate. She's involved with numerous interest groups within real estate, promoting herself as a woman, various interest groups. She's a veteran. She's a USC Trojan. She's everything good in life. My colleague, fellow branch manager at DXP, she has a branch in Beverly Hills for her team as well. Taunee English. Taunee, welcome to our call.
Thank you for having me, Mr. Bill Gross.
And I had to limit myself because I could have introduced you for like the entire hour.
Well, I appreciate that. Thank you. I need to have you with me all the time.
So I'm sure people see you around in social media like I do everywhere, doing everything all the time. Today, we wanted to talk a little bit about what options do landlords have? Because if you're in California, and particularly Los Angeles, you would feel like you're under attack from different laws, regulations, public interest groups, nonprofits. Now the city of LA is going to start representing tenants. So talk a little bit about what's the environment for a landlord today, and what are things they can do to protect themselves going forward?
Well, right now, we're advising realtors. What CER is advising realtors on regarding protected landlords. They're telling them hire an attorney, a real estate attorney, hire an eviction attorney, because right now it's really too serious, and the laws are different in each city, for realtors to really be up to date on what's happening. So they're just off the bat. Just telling us to just refer them to an attorney right now because it's just so sticky with everything. But so what I'm doing with clients is that those who are tired, of being a landlord and tired of, California being so tenant friendly, they're, selling their properties, and instead of doing a regular 1031 like exchange, they're doing what's called a Delaware statutory trust, which is, and which is really good about that particular product is that you're able to just transfer the net profit. Because as you know, on a regular 1031 exchange, you usually have to exchange for the same amount. If you sell the property for $1 million, you have to buy another property for another $1 million. And even if you have, like, let's say a $500,000 loan, you have to go and get another loan. So for landlords who are distressed pretty much because they didn't pay their mortgage because their tenants wasn't paying them rent, that type of product may be great for them because that way they don't have to go get another loan. You see?
They may not qualify for a loan.
They won't qualify for a loan. Exactly. So all they have to do is just roll over the net profit into a Delaware statutory trust. And what that is, they would still get the deferred capital gains benefits. They would still get the Schedule E, the still rental income and deductions. But the difference is that they no longer are doing hands-on property management, and they don't own the actual properties. They own interest in trust. I had one client, they weren't distressed. They were just tired. And this also happens with, landlords who are in their, late 70s and 80s. And they're like, okay, they're tired of the BS of what's going on here in California. So this client had called me up saying that, hey, I'm going to sell my, single family rental because I'm tired of the, the games that the tenants playing with COVID and everything. And he did not, and they were going to sell it without realizing that, wait, you're going to be hit with capital gains, and you have to recapture, this is the accountant in me, by the way, you have to recapture all the depreciation, which is transferring to ordinary income.
Hold on one second. Let me just bring me up to date. So in addition to being a real estate agent and a number of other things, Taunee was an accountant in practice, primarily as an accountant before she went into real estate. So when she speaks about these things, she speaks with authority. So pay attention. Go ahead, Taunee. I'm sorry.
Sorry. Yeah. So yeah, I used to run a CPA firm, but yes. So when they told me that, I'm like, wait, hold up. I don't want to just sell your property, because then you're going to be hit with capital gains and the depreciation will be recaptured into ordinary income. That's going to be painful. But they were so frustrated. Yes, but this is happening to a lot of people. They're so frustrated.
Recapture depreciation is like the worst because the benefit of the owning the property is you get a write-off depreciation of the asset, which would be, let's say, the carpet and the value of the wood and the metal and the windows and all that stuff. And so when you enjoyed offsetting your income with this, that's what the benefits of having real estate is. If you have to recapture it, then basically you spent that money a long time ago, but not paying taxes. You bragged about not paying taxes. Now you're paying it all. And the rate's higher now than it was back then. So you really put yourself in a bad position if you have to do that.
Yeah, and that's what I love about real estate. It's the only, business where you can actually have a positive cash flow, but a negative, net profit because of depreciation.
Right.
So yeah. So, but you have a lot of, landlords, housing providers who just frustrated with everything, and they are just selling their properties without knowing that, hey, they're selling their properties, but they don't want to do exchange because they don't want to buy another piece of property right now. Interest rates are higher, or they don't want to roll into another property they don't know anything about, So
well, plus, the other ones, they sound so good when people describe 1031s, the standard trading in another property. But in my experience as a broker, it almost never works out for the client. I'm trying to think of my career. I don't know if I've ever had one successfully, but I know so many they have to identify 3 properties, and they found one they loved and one they liked and one they just had to put a third one on the list. And they do the due diligence, and the one they love, they don't really want to buy. And now they're buying the second or third property, or they're facing the consequences of all that. And in my experience, now maybe there are people on this call who have done it successfully. As a broker, I've never had a customer do it and say, wow, that was great. I'm really thrilled with how that worked out. The opposite, I've had numerous customers mad because they identified properties that just didn't work out for them.
Right. And you have such a short amount of time. So that's another reason why Delaware DSTs are great, because of the point that they're a good backup, So if your escrow falls out, you can just roll over into a DST. And what the DSTs are is you have some that has just a portfolio of just one property, and you have some that has a portfolio of like 25, commercial properties. Like one had, had a bunch of smart and finals in there, and then you have another one that may have, 4 or 5 apartment buildings. And so my client, just to give this scenario, they sold their single family home for $800,000, right? And then they have a loan on it. Then we were able now to diversify their portfolio. So they bought some interest in one DST that had Amazon in Arizona. It had Amazon as the tenant of that one building. And then they transferred some into a 164 unit building in Tennessee. And then they transferred the rest into another apartment building in Florida. So now they're able to diversify the portfolio, and they no longer have the headaches of landlord management, vacancies, plumbing, all the little headaches you have for property management. And so also the best thing about this is that they get to leave interest to their kids. So they don't have to have their adult children have to unload the property when they pass away.
It's a trust.
Because you know how that is. And this particular client had that issue because she was left a 25 unit building, and her sister didn't want to sell, but she's doing all the work. So she understood that she didn't want to have that issue with her kids when they, it's easier for them to, have this interest in the interest, and then they can make their own independent decision if they want to continue on the DST route or take their money out and roll it into another property. And with DST, you normally have to keep it in for a minimum of 5 years, which you would have to do anyway if you were to buy a replacement property.
Well, normally you'd have to get your money back, right? If you buy it and you sell within a year, you almost always come out behind. You've got real estate costs going in, real estate costs going out, closing costs, taxes. You almost have to tell yourself you're going to be in it minimum 5 years anyhow.
Exactly. And that's why I tell people, because they're like, well, we're not going to be liquid. I'm like, well, you wouldn't really sell a brand new property you just bought in a year or two anyway.
Right.
And the thing is, and these are earning around 4%, interest, that's being paid out, and they're getting paid every month without the headaches. And some are paying a higher rate, and those are the ones that are have the portfolios of net leases.
Now go back a little bit. You can diversify buying different DSTs with different product types, right? You mentioned warehouse for Amazon, multifamily, triple net retail. You can mix and match. Yep. And you can mix and match geographically, Las Vegas, Arizona, California, Florida, wherever you want to be in terms. And it adds the additional benefit of you're holding the property as a trust. By definition, it's already has a beneficiary designated as opposed to property that might have to go through a probate.
No, not necessarily. No, it's just that's what they call a Delaware statutory trust. You still need your own trust.
Got it. Okay. So you're earning shares in something, but
you just earn shares in this DST, in this Delaware statutory trust. You're just earning shares on it. But to protect your interests here in California or any probate state, oh no, you need to have a trust.
Got it. Now, I don't know if this is a shill or not, but Val says, Val, who is in Orange County enjoying the nice sunny day and has rentals in Kern County, gives a real life example. She sold the house for $200,000 and bought 2 DSTs for $100,000 each. So you don't have to go 1-to-1, and she has some nice passive income, right? So this might not be for the brand new person on the upswing on their career, but maybe you've accumulated a bunch of property and you're looking to reduce the overhead and to reduce your administrative work, and as an exit strategy, more effective than I think 1031s, which are really 1031s. It almost like it forces you to change geographies or forces you to change. Product types. If you're selling a couple of houses, it almost forces you into multifamily. If you're in multifamily, it kind of forces you to look at commercial, whereas this gives you the opportunity to pick whatever you want. Now, so how broad are the choices of DST investments? Like, is it like an old company 401k where they give you 8 choices and 7 of them are bad and one's really bad, or do you have multiple choices?
There's multiple choices, and there's also multiple companies that have the different products. So I have worked with 3 companies. And so we tend to, say this is what this company has in their inventory, and this is what this company has in their inventory, so you have a choice with that. But also too, what you were speaking about is not, we talk about brand new realtors. This is a good way for them to go after listings, because
for realtors, for sure.
Yeah, this is a good way for them to go after listings, because the reason why sellers are not selling, because they don't want to have to exchange into something else. So I'd rather keep the devil I know, which is the property they have.
Correct. I see this all the time. The time. You're right. They're locked in. They can't buy something else because the rates on the new property make it not work as well. Maybe they have a good rate where they're at now, or they've paid down to where it's so low it doesn't matter. And they're frustrated. Their property management team is not really performing. The property really needs a facelift, but they want to put capital into it because that's a 5-year commitment that they're not looking to do. So as a listing tool, looking for these sellers, that's a great concept.
Yeah. And not just that too. I mean, these sellers, you give it, they want the relief. That's why I call it landlord relief solution, for those that are either distressed, because if they're distressed, they have to sell and they're going to be, get hit with capital gains or recapture depreciation. So that sucks, or you have ones who just, hey, okay, great. I can get rid of this. I can get rid of this headache, because California, I love California. I'm a California native, but it's just not a landlord friendly state.
No, it's not, Taunee. No, it's not. Now, Val says she's not a shill. That's what a shill would say. So, Val, I'm very suspect of you. I don't know if we've ever met, Val. Just having some fun. But thank you. Thanks for participating in and jumping on that. So how do you go about finding people who you say distressed? What are some of the methods you use to find people who are distressed?
You can use your title. That's the best way, is have a good relationship with your title rep, and ask for a farm. But you will find out more about this at my Unleash More listing.
Whoa, you have an Unleash More listing presentation? Is it a webinar?
Yeah, it's a webinar. And so
do you have any information I can scan that might help me get more information about it?
You have it right there on the QR code. You scan that. So
okay, let's do that.
We'll go more into detail about how to get listings at that webinar.
Okay, so we're going to go ahead and do that. Let's see here. Scan me. Okay, got it.
Yeah, we'll go into more details there.
Nice. Unleash More in 2023. Scroll down to about, select dates. Very nice. Good. So your scan's working. Hey, we got some questions on the coming in for the live stream. Luis Mello, buddy, haven't seen you in a long time. And I was in Van Nuys a couple weeks ago, and we were all talking about you. Luis says, and this is alternative, Tanya. I'm sure you come across these opportunities for your clients. That you can sell the property on a seller finance note and collect monthly payments to avoid some of the capital gains.
You don't avoid the capital gains. You're just deferring it. So you're not avoiding. The client is still paying capital gains. Just that it's just being carried over the time that they're paying installments, and they're still recapturing that depreciation. So
as you capture, so the way the seller finance works is whatever money you receive, that capital becomes the profit you have to pay taxes on and recapture depreciation.
Yep.
You can do an interest-only loan for a period of time, and at some point they're going to refinance. Now you have the whole profit and the whole recapture depreciation that you have to do something with. So I think, Louis, that's a great technique to defer the problem down the road, but you still have this profit and you have this
you still have to pay taxes.
Depreciation at some point get paid.
And the capital gains. So only way that's, to me, my opinion, only way that's beneficial is if you're able to charge quite a bit of money to offset the taxes and everything. Right. That you'll be paying, because it doesn't make sense. The only way that only makes sense if you're gonna, have enough to, or it also makes sense, by the way, if you have a lot of losses, because I had a client that we did seller finance on, and because he had, carryover losses, then that offset it. So It does make sense if they have quite a bit of carryover losses, then that will be a good solution. But if they're going to do that, it's better to be able to up that price and have a higher interest rate that they're charging in order to offset the capital gains and the recapture depreciation.
And I think Louis says, seller financing is a great tool to have in your toolbox. Yeah. And there's multiple tools.
I use it all the time because I hate property management.
Well, and people get a hold of property they know as they're collecting payments. As you say, the problem they know. The problem there, though, is the other problem with seller financing is as soon as the buyer can refinance, they want out. They're paying you a little higher rate, and they're going to fix the property up. And so one day you're going to get a phone call saying, "Hey, we're paying you off," and you're going to have to scramble at that point. But definitely,
no. The way I set my seller financing for my clients, 5 years. You cannot get out for at least 5 years.
Oh, prepayment penalty. Very nice. Very nice. Okay, talk to Tani. She's a little tougher than I am. Okay. And then so we got a question on Facebook is, what is the annual management cost on the DST trust that you're working on?
Well, it's different from each one. That's why I gave you the net that the clients are netting between, netting on average 4%. And that's after the management costs.
Okay. So that's just part of the expense package. And at some point there's expenses. And then I'm doing is I'm trying to email myself this link off my phone so I can post it in the chat box. I'm not, Jess, if you're able to, if you could scan that and put the link in the chat, if you'd also put the link on the restream in the YouTube, that would be great.
Yeah, sure thing.
Thank you so much. Jess is the greatest. Okay. So other questions. Hey, you guys, this is meant to be participative. She just laid out to you, I think, a phenomenal. Now, this is a strategy I'm using. I don't want to mislead anybody. I'm not getting paid by Tanya. A lot of these events you go to, the person's being paid or they have a coaching program and they're getting some. I just think Tanya's the greatest. I like talking to her. I think the more time you spend with her, the better your life is going to be. And she's offering a very, I've seen these DSTs promoted, not by people I trust, not by people that I would feel comfortable with, and more importantly, see if there was a problem who would help me work it out. So here's a woman who's involved in this product. Feel free to ask questions. And then Val, if you're not a shill, I don't know, I need some sort of information to guarantee that. But any questions for Tani while we have her on the call?
Well, one thing I have to mention too, there is a requirement that the person that's doing the 1031, they have to have a $1 million net worth. That is the requirement.
So is that the same as being a qualified investor, same requirement, or is it different?
It's different, but their requirement is the $1 million net worth is their requirement. It's just to put that out there. And so I just want to make sure I put that
liquid net worth, or does that include real estate, or how does that get calculated?
No, it's your entire assets. What's your entire assets worth? So it's mostly, of course, real estate.
Got it.
And your real estate, your brokerage accounts, your real estate, your brokerage accounts. Yeah.
So we put the link
And
to
also,
her program, and here it is an Eventbrite. The link's in the YouTube as well as in the Zoom call if you're watching that. So thank you just for getting that done for us. Ernest, I see your hand up. Let's get you unmuted. And what do you have? It says ask Taunee. So Ernest, go ahead and ask Taunee. It says it right there in the top left. Ask Taunee. So Ernest, ask Taunee. Go ahead. I see your hand up, but I don't see your. You need to unmute yourself. And if not. There you go. Nope. Ernest, no. He asked a question in the chat box. What's the relief? Okay, his mic's not working. What's the relief for the landlords? His mic's not working. So I'll summarize, and then Taunee, you can expand on it. So the idea is if you have a property that you're a landlord on, and you want to sell it, if you're in distress, you might be missing payments. You might not qualify for a loan. You might want to sell a property. Let's say it's worth $4 million, and you have a $2 million loan. You have taxes due on the profits. The profits could be, if you buy it at $2.5 million, it could be $1.5 million plus. You've been writing down the depreciation on some of the rest. You could have a taxable income more than you receive easily. You could actually have more taxes owed than you're actually going to receive, depending on who owes the money and what your capital situation is like. And so the problem there is you're stuck with a situation where you don't like the investment you have. You can't really get enough capital to upgrade. Also, you might not qualify for that loan. You might have a $2 million loan you got 3 or 4 or 5 years ago. Now rates are higher. Maybe you're not in the same job you used to be in. You're retired or whatever. Not so simple. And so those distressed landlords can simply just sell the property and roll whatever cash there is and defer all of that at whatever the net is, regardless of how much is profit, regardless of how much depreciation we captured, and put it into a 1031 exchange, specifically a DST, Delaware Statutory Trust. And those investments look more like managed, kind of like more like mutual funds or real estate than.
Or real estate investment trust would be another way to look at them too, without being public traded. But yes.
Got it. So like personally, one of my favorite investments I have is a real estate investment trust called Rexford Industrial. And it so happens, look, I'm not a stock touter. I'm not promoting it. I'm sharing what I've done. My brother-in-law runs it. He's a genius. He spent his whole career in industrial property in the Los Angeles area. They have a very defined market, and they are, I think, the leaders in that market. And over time, they buy these properties, fix them up, and rent them to huge corporations. And they're not vetting, first-time home buyers or renters or all that. Their tenants are major corporations and companies, and they have a professional team that handles all that. I just gave them money and I get, a return for my investment, dividends and appreciation. Yep. So there's different ways to manage it. My business life is pretty hectic. That's why I don't personally want to own a property on property managing. I don't really have the time to deal with that. I barely have time to deal with what I have now. So that's my preference. Ernest, I see you got your mic working and you're unmuted. You want to jump in?
Yes. Can you hear me?
Yeah. Do we answer your question?
Well, yeah. But what about if you don't want to sell?
Then don't sell.
Yeah, don't sell. I mean, is
there any relief for landlords that want to keep their properties?
Well, you hear from, not really. You hear the city, they're giving grants and stuff like that, but those go pretty fast, So it's, they can't refinance out. The relief they can get is pretty much negotiating with their banks. Some have did that. So the back, mortgage payments they didn't pay, they put at the back end of the loan. So it's doing loan modifications is what some landlords are doing. But,
Ernest, where do you have your real estate, Ernest?
In Los Angeles.
There's relief's not coming, my friend. Yeah, the cavalry is not coming to save you. I'll share with you, for those in Los Angeles, I happen to be on the neighborhood council. I'm an elected member of the South Robertson, where I live, neighborhood council, which theoretically advises the LA City Council. So you might say, hey, Bill, we passed this big tax increase to help in homelessness. Isn't that great? Well, so if you've ever been to eviction court, what you see there is every single tenant Now, not all are bad, not all are deadbeats, but a lot are deadbeats. But every tenant, including the deadbeats, are solicited 2 and 3 times for free legal advice. That's a standard practice. There's these nonprofits that help tenants beat landlords out of their rent. So that's not good enough in Los Angeles. So LA said, we need to help those tenants more. So they're taxing all of us over the next few years, $100 million a year in increased sales tax on sales of houses. They're going to take 10% of that, about $10 million a year, and hire attorneys so that rather than those tenants having nonprofit attorneys, every tenant in LA gets a right to a city-paid attorney to beat landlords out of their rent. So if you think it was bad before when you had maybe a tenant with a nonprofit attorney, imagine what we'd like to go to a judge when the other attorney works for the city of Los Angeles representing them against the landlord. It's not going to get better. Nobody's worried about making it better.
Yeah, and that's why I have a book I wrote called So You Want to Leave California? Here's the 16 states Californians are moving to.
Nice.
Yeah, because it's just, we have the weather, but oh my God.
Yeah.
They don't make it easy.
And there are landlords who figured out how to make it work. Hats off to them.
Yeah.
They're very strict on the tenants, and those laws are being attacked all the time. They're very good on managing their tenants and keeping them happy and being proactive. A lot of work, but they've got that figured out. And as a result, there are some people who in LA, but they tend to be larger operators because it takes economy of scale. They have the staff and service to help those people. But for the smaller mom and pop landlord, nobody cares about them here in LA, and they're being decimated from all sides.
Yeah, they're the ones getting hit the most.
Yeah,
they really are.
Yeah,
now they're hitting small. Now they're even having it where they're hitting the single family rentals too. They're trying to find a way to do rent control on that now.
Yeah, it's been pretty rough.
Yeah,
I feel for you.
I know that there are lawsuits coming because this is what I would call legislative overreach.
Well, we've been
trying
though. Yeah, but we've been trying at the state level and at the local level. I'm a state director for California Association of Realtors, so we spend a lot of time and money trying to lobby and be on the landlord side on this. We do understand tenants and everything, but it's we do understand that you have to also understand what's happening with the housing providers, because most of the housing providers are mom and pops, and they could lose their property because of 2 or 3 years of no income. And we keep trying to, put that in front of, the local elected officials. Remember,
they don't care.
You want to keep extending these eviction moratoriums and doing all this, but then are you going to decrease the property taxes? Right now, insurance have went up drastically.
Right.
It went up drastically for landlords.
Right. Yes.
You're not getting a discount on that. Are they getting discount property taxes? Are they going to get, what's happening with it? Are they going to get their forgiven? Are they going to have those months of mortgage not being paid forgiven? No, that's not happening.
What the local government doesn't talk about why rents are so high.
Right.
They don't talk about why property values are so overinflated. But if you look, that's what's driving these high rents, is that the taxes are high, extremely high, and the cost to build buildings, properties, is extremely high.
Yeah.
And property values are just way over extremely inflated, I guess is the word I'm looking for.
Yeah, I think that a lot of elected officials, well, I shouldn't say a lot. I think some believe that, landlords are just rich and then just taking advantage of tenants and stuff with high rents. And that's just not the case. It's the point is supply. It's all about supply. Everything's ran by supply and demand.
Well, politicians look at a building with 20 people, a 20-unit building, and they see 20 voters who vote to steal the property from the owner, and they see one owner voting to keep his property. They're going to vote for the 20. And that's not how it's supposed to be. We're supposed to have principles and laws. But the reality, I can tell you, I'm an elected official. I'm a minor, low level. I'm on the neighborhood council, which advises the city council. And I don't get paid anything. I do it as a volunteer. City council members, just anybody who's listening, anybody want to guess, what does a city council member in Los Angeles get paid? Anybody want to guess?
200,000.
In fact, put in the chat box, what do you think their salary plus the dollar effect of their benefits is per year? We have 16 city council members in Los Angeles. How much they get paid? Anybody want to, I'll just see you guys in the chat box. Just, curious. By comparison, a U.S. senator makes $174,000 a year. What does a city council person make? $80,000. That used to be a very average answer I would get from Chris. Thanks. So I'm going to tell you, because I know the number. The number is they get a salary of $217,000 plus they have a benefits package that's computed where the total is worth $298,000 a year.
So they're getting almost $500,000 a year?
298.
Oh, 298 total. Okay.
298 total.
Okay.
Yeah. So these people are paid good money and they want those jobs. And so literally they just count the building and say, okay, 20 tenants, one owner, boom. Let's just take the property. And I think that's where things are headed. I mean, you look in San Francisco, they're now charging owners. Their owners say, well, it's not worth renting out, so I'll keep it vacant. Now they're charging you for vacant properties. So you as an owner say it's not worth renting. And they're saying, okay, well, great. We'll just charge you $5,000 a year because we want the tax revenue anyhow. So it's
so wrong. That is so wrong.
It's not slowing down, not stopping. So I'm not arguing whether it's right or wrong. You could say it's wrong, Taunee. I'm not going to disagree with you. But what I'm going to say is that trend's not slowing down. It's getting faster. It's getting more outrageous. If you think what's outrageous now, the city paying for legal fees for tenants, when every tenant has free attorney's fees already to begin with, just tells you there's no end to how far they're going to go. It's really crazy. So for landlords, if you have a building, I would say, do you really want to be in that business 5 or 10 years from now?
Right.
And personally, I own limited partnerships in properties in Texas and Florida. Why? Because they're landlord friendly. They're not going to steal my building and give it to the tenants. California's decided. And again, there are very successful landlords who are worth a lot more than me. How they've worked it out, I don't know. I just don't know. It's not my job to really worry about it. My job is to worry about me. And Ernest, I feel your pain, man. I really do. So,
yeah. I mean,
okay. Other comments or questions? So, put it on your YouTube. Okay, I think Jessica, if you could put the link on the YouTube also, if you haven't already. Thank you so much. Taunee, you're being asked on Facebook, can you work with a spendthrift trust? But now I think the answer is a spendthrift trust is a trust created to prevent the beneficiary from spending all the money. It defines how much money they get, and you can define what assets go into it. And the same assets that she's talking about would be appropriate in some cases for spendthrift trust. But
I have not dealt with that personally, and that is more of a legal question, quite honestly. That you have to talk to a estate planning attorney, just depending on how that trust is really set up and what the parameters are, and also if that actual trust actually owns that particular property too. So, well,
the spendthrift is just a terminology for a type of is a trust designed a certain way. As we had an attorney explain that a few months ago, and like any other trust, certain assets can be titled in the trust. So you can put, stocks, bonds, property. Yeah. And title it in a trust, same as these assets. So the answer is yes, they're appropriate for that as well. And if you're interested, reach out to Taunee, and I'm sure you guys can get clarification on the legal side. But
I'm really careful with that when it comes to that. I work with estate planning attorneys, but I'm not an attorney.
Keith Kennedy asks us on the YouTube, Taunee, how's the current interest rate environment affecting the DST market?
It's not. Just like the overall real estate market itself is affecting it, but people, they still buying properties, they still have inventory, and don't forget with these type of deals, you have to stay in those deals for at least a minimum of 5 years anyway. So they still have, interest that they're still selling in deals that they already purchased a year or 2 years ago.
I think all assets, have to compete with inflation to pay money to investors. And so some do well in that environment. Multifamily has done well in that rents have gone up to keep up. Some long-term, if you sign a long-term lease on a building, it's hard to get raises because you have one tenant, let's say Amazon or Chuck E. Cheese or somebody. You can't go out and raise the rent every year because they sign a 10, 20-year lease. So different assets have different ways of doing it. Public storage is another one that's done real well in inflationary times because they can pass on because they're turning people over all the time. So it depends on the asset. And I'm sure, Tiny, must have a whole variety of different DST products.
And you're right. I mean, and then one product, for instance, that one of my clients invest in was what they call essential businesses, the ones which is grocery stores. This entire DST just had, 20 plus properties that were all essential. So people are gonna, have to buy groceries and etc. So that is still doing pretty well, for instance. So it depends on what, assets are in those DSTs.
Louis, I saw a couple of notes from you on 155,000. I'm not sure I understand what you're saying. Then he asks, where do you see prices going for the near and long-term future? Do you have any? I have a crystal ball, by the way. It's right there over my shoulder. Let's see where it is. Right there. You can see it in the background, right? There's my crystal ball. And I look at it all the time and say, where rates headed? It doesn't tell me anything. So do you have a crystal ball, Tiny? Does yours work better than mine?
I do not have a crystal ball.
Okay.
And I know that you and I know you're Mr. Statistics too. I mean, if you catch Bill's Mondays, man, this man's all about statistics.
Well, I would say, look, I'm the opposite of predicting the future. I say the opposite, that make sure you know where you are and watch it every week. And you'll watch the trend line and they'll affect you in the short term. And I just don't think you can predict the future. If you tell me the future news, I'll tell you where rates are headed. If you say to me, Bill, I know Russia's going to beat the heck out of Ukraine and take it all over, it's going to affect interest rates. If you say, Bill, I know Russia's going to concede and back out and there'll be peace in the world again, I know how that will affect interest rates. If you tell me China invades Taiwan or doesn't, I'll tell you about interest rates. But if you can't predict the future, how can you project the interest rates that will be affected by the future? There's no way to know. So I would say make sure your strategy is appropriate for now. And now we're in a very volatile time. So I would definitely keep my expenses lean, my debt low, and liquid cash available to take advantage of opportunities.
Oh yeah, because this is a great time to buy in the stock market.
Yeah.
I'm like, I love REITs. I love, real estate investment trusts. Boy,
oh, nice. Well, check out that Rexford Industrial. It's my brother-in-law's, they've done real well. Okay. Keith Candy says, it seems like the increase in rates is helping increase the rents. Yeah, exactly. That's exactly what happens, for good or for bad. And that's good for those who are paying. Of course, tenants who aren't paying, their rents can go up, but they're not paying the increased rent. So that becomes a bit of a challenge. I remember now, Lewis was putting the salary for the LA County. He guessed 155, pretty close. Ernest said 200,000. He was the closest because their salary is technically 217. And then with they have an incredible benefits package. It makes the annual benefits total package worth 298. So he wants to invest in a REIT. I'm with you on that. I like REITs. I also like multifamily syndications as a limited partner. Yeah, they do the hard work. I get the check and I get as long as I pick a good team and a good investment. And so what Ty is saying is she's vetted a number of similar types of investments. If you have money to invest in chunks, talk to her about that. And specifically the DST is a great way to transfer property as well. Okay, and so what are you going to teach at your Unleash more in 2023? You're going to talk about, looks like listings with trusts and probate. What are you going to talk about there? Give me just a high level. I don't give away all the secrets, but give me a high level overview on that.
Okay, so Paul Horn. Right?
Yeah, real well.
Paul Horn, yep, he's our featured speaker. So Paul Horn, he's really Paul Horn's known to go around to associations talking about teaching realtors about the A to Z, probate process. Mm-hmm. So realtors going to walk away understanding how the probate works. Bill Gross is number one, expert in probate. And Paul's going to break that down for realtors to how probate works. And we're going to talk about ways to get listings, trust listings. We're going to talk about that. We're going to talk about how to get listings for probate. And also, to really explain how probate could be a liability. So the asset, and we're explaining how you can really touch your clients and educate them on getting a trust. So we're going to be
No,
covering that.
no, I know Lyndon Gray. I've met him. I've interviewed him. Great guy. Do you work with him, or is he just another person in the DST space that you're going to introduce?
Okay, so the next one, of course, is unleash listings with DSTs and structure installments. So yeah, Linda is one of the financial advisors, because we, as a realtor, unless you have a security license, we can't sell DSTs. You have to go through a financial advisor for that. So Lyndon, I worked with him for years, and Charles is one of the.
No way.
Yeah.
I met him. I think he is great. In fact, he's going to be on this program in about, I think, 4 weeks.
Yeah.
He
great.
is all that in a bag of chips.
Yeah, I truly love working with Lyndon, and Charles is one of the companies that have the DST products. So we're going to be educating people on DSTs, how it works, the benefits of it, and how to get listings with them. We go more in depth there regarding that, and about structure installments. So it's not just going to be about property owners. We also, landlords. It's also going to be about those that are, principal residents. The reason what they're telling you, well, I don't want to sell because of capital gains. So so Lyndon's going to go over structure installments so that you can get sellers who need to downsize. They're not selling because of the capital gains, but they're sitting on this big house, and they don't want to sell it. So he has a product to help realtors overcome that objection.
You know what? I met him about a month ago. I liked him a lot. My normal pattern with it before I invest money with somebody is I don't tell them this, but I call them up and say, hey, I'd like to do a one-on-one video with you. And I did a video with him. He was really good, very informative, really nice guy, humble guy, smart. And then I asked him to be a guest on this show, I think 3 or 4 weeks from now. I'm really impressed with him. So thank you so you have 2 programs coming up. Now I see Wednesday, March 29th at 11 a.m. So that's in 3 weeks from tomorrow, 11 a.m. That will be Unleashed Listings with Trust and Probate. And that's with Paul Horn. Paul, I think, is the most prolific probate attorney in Los Angeles County. He really has done more, I think, in the last 3 or 5 years than any other attorneys.
Well, and also regarding Paul, just to add to that too, is that we brought the certified probate and trust certification to CER, and he, wrote that. He wrote that. He instructs that. So there's actually a certification with that too, by the way.
Now, there's not a certification with your call on the 29th. There's more of an introduction to Paul, and then they'll get a chance, like a discount, a chance to sign up with him if they want to do that.
Right. They get that. And also Paul and I are doing on April 6th. We didn't put that here yet because that's a separate thing, but that is, we are going to have the actual probate, trust and probate certification on April 6th.
Okay. And that'll be after that. And then you also have April 18th is the event with DSTs in detail. Well, great. Thanks for sharing those details with us. And I need to have you come on Probate Weekly to promote your probate, the March 29th program. We need to talk about getting you a commercial or something on that, just to pop in, promote that. I know people on my call will want to hear about that. Okay.
Okay. Thank you.
Good. Okay. So what are names of some good REITs, Ernest asked? Look, I'm not an investment advisor, so I would say find yourself a great investment advisor. My son-in-law works for a great company in Santa Monica, Gerber Kawasaki. And you know them too? You know everybody, Tony.
I brought them to my association to be our investment manager.
Oh, yes.
I brought them to my association.
Michael Malk, one of the speakers, is my son-in-law.
Yes. Yep. I did the due diligence, and I did the due diligence to find certified financial planners for our association, and we picked them.
They're an excellent firm, and my son-in-law is the head of their tax department, and they did a talk at the Greater Los Angeles Area Association of Realtors, GLAR, with 2 A's.
Yeah,
so good. That's how you got that. So I would say to Ernest, find a great wealth advisor who can see your whole package, how much money you have in real estate, how much you have in this investment, that investment, see how much you have, and then start with something that's comfortable for you. And don't give them all your money, give them a chunk of it. Exactly. I have a good chunk with them. I have a good chunk with Vanguard, and I have some other investments and such. But I would say check out Rexford Industrial. It's a New York Stock Exchange traded stock. A REIT does a really good job. Public Storage is another one that you should take a look at. Every stock's been up and down with the market these days, but thank you so much there. Okay, can I add
a couple of things regarding that?
Taunee, you can do whatever you want. Yes.
One, regarding, Gerber and financial advisors like them, the difference with them versus Vanguard or Morgan Stanley, et cetera, is that they are fee based. And they're not selling a particular product. So they don't have a loyalty like Morgan Stanley, the financial advisors for them and other brokerages like that. You got to remember their loyalty is to their products.
Right.
You see, whereas you have someone like Gerber Company, they're certified financial planners with no loyalty. They're fee based. They're not commission based. So they don't have that bias where they're going to give you advice about their products, their stocks and bonds, et cetera. So that's the cool thing about working with a certified financial planner like Gerber.
Yeah, they do a really good job. I have to say, I'm really happy with.
And just one more added thing about real estate investment trust versus DSTs.
Sure.
The different, what I like about DSTs, that is the difference between them and real estate investment trust, is that what my client loves is that you're able to actually point out that you own a piece of that particular property. Whereas a real estate investment trust, you don't have any idea really, what you're owning. So you have more of a sense of ownership, especially for mom and pop landlords who are used to owning properties and everything. They do feel more comfortable in owning DSTs because at least they could point out, hey, I got, 20%, 30% interest. And my tenant is Amazon, more so than the vagueness you get with the real estate investment trust.
Got it. Well, look, I think at the end of the day, it's a product you own, and it's whoever's managing it for you both. And you need to look at both of those. In the case of the REIT that I invested in Rexford, I know my brother-in-law is like the bomb in LA County industrial property. So, he's in charge. It's a stock. I own a percentage. He has billions of dollars. I'm just a small little piece of all that. Glad to have my small piece. But you're right. DSTs, you have a bigger chunk of a percentage of an actual property. So, but some of those things I don't know much about. So I just let somebody else take that responsibility. So it depends who you are and your personality, and maybe when it works. Okay. And then Ernest asks, what's the name of your real estate agent organization? Do you mean who she aligned with as a broker, or do you mean Ernest is asking, what's the name of your real estate agent organization? So she's a member of, and what's your position with Clark now?
Okay.
President
I'm president-elect this year for Greater LA Association of Realtors.
Well, stop 1 second now. She's the president-elect for anybody here who's a member of GLAR. And if you're in any MLS, if you're a realtor, you got to have hats off this lady. We all say, well, I don't want to get involved with that. Well, she got involved with it, and thanks to her, we have an association. She's the incoming president for the Greater LA area. So thank you for your service there. And then you're a broker associate like I am with eXp Realty in Beverly Hills.
I'm part of Bill's team.
I'm part of Tawnee's team. Someday when I grow up, I'm going to be like Taunee. Okay. Okay. I think that's all the questions. And again, check out Taunee. We have the link in the description below. If it's on the chat box, I put a link in. My particular financial advisor is Eva Agi. She's with Gerber Kawasaki. They do a great job. Talk to them if you're interested in REITs we talked about. DSTs, give Taunee a call or come to her event March 29th. She's going to be with Paul Horn on probate and listings. And then April 18th, she's going to go into details on the DST's instruction installments. All that's available on Event by Taunee. It's been a pleasure.
Thank you so much for having me. This was fun.
I learned so much about you today. And I know you thought pretty well. It's pretty embarrassing, but it was really a lot of fun. I really enjoyed it. Let's do it again. Have a great day. Everybody on the call, thanks for your help, and we'll see you guys soon.
Thank you.
Thanks. Bye-bye.
Bye-bye.